First of all, the numbers as you see them, the spending that they're making, do you think these are positive steps that will have rewards eventually?
I think they're spending money on a lot of stuff. So clearly they talked about marketing of hardware, but there's a part of Alphabet called Other Bets. And Other Bets is losing about $4 billion a year on all sorts of bets, from fiber, driverless cars, life sciences. And I think analysts and investors are wondering which of them will pay off and when, because if none of them do, then Google's or Alphabet's wasting $4 billion a year.
YouTube seems to be something that the company is bigging up a lot. That and cloud showing significant growth. Where do you think YouTube could go?
I think
in terms of
YouTube will probably be the biggest driver of Alphabet's revenue and profits, I think, for the next 2 or 3 years. So clearly it's in a good space. It's digital video, and as TV audiences decline and people cut cords and advertisers still want to interact with consumers with a video, YouTube's in a really good spot. It's a good spot for a few reasons. Firstly, I think it's dramatically underpriced. When we look at like-for-like pricing of YouTube versus TV, YouTube is probably about half the price that it could be, even with how it is now. But on top of that, they're growing their inventory, the number of people watching videos, and they're planning, or they should be planning, to launch all sorts of new ad units and targeting opportunities, which will also drive prices up and volume up. In addition to which, they've actually signed a deal with CBS, and they're talking about other deals to bring things like live NFL games to YouTube. You add all that together, YouTube is fighting for a very large share of the global TV advertising market, which is a $200 billion market. So if Google could get, say, 20% share of that, which is not impossible, that could make it a $40 billion business in the next few years.
Wow, I mean, we had a guest on earlier, Adam Burke from AdParlor, who was saying maybe we shouldn't be looking at cost per click as a metric anymore. I'm looking at cost per click falling even more, down 15% for Google overall, but we are seeing more people piling in and buying ads with Google. Yeah. Should we, if YouTube's going to be such a big player?
Well, I think cost per click's been a red herring forever. So there's actually 3 drivers of the drop in cost per click, and none of them are necessarily worrying. There is the move from desktop to mobile, and in general, in the categories where Google makes a lot of their money, like insurance or e-commerce, conversion rates on mobile are lower, and therefore clicks are lower. That's slightly worrying, but there are solutions to that. But another 2 big reasons for CPCs to drop is there's more and more clicks in developing countries where GDP is lower, so click prices are lower. And there's also a lot more clicks on branded queries, people searching for a brand, and when that happens, the clicks are cheaper. So there's actually 3 drivers of lower cost per click. 2 out of 3 are red herrings. They had nothing to do with Google losing any momentum. When it comes to desktop versus mobile, Google does have a potential issue. They need to work out how to make money in mobile. But to be frank, Facebook's worked it out, and Google should be able to work it out. Facebook prices are actually higher than Google prices, and they've got a whole clear roadmap of what they've done to get there. And quite frankly, Google should, to a large extent, copy Facebook.
I want to talk a little bit more about Facebook with you, because I know you're a man who helps brands connect with not just the likes of YouTube, but also Facebook, Pinterest, many. Facebook today had the interesting news that they've just hired Hugo Barra. He's coming back from Xiaomi. He's going to be joining to do the VR and AR element. And they're talking big once again. This is the next big platform, major computing platform, so says Facebook. VR and AR, do you agree?
I'm on the fence, and if I had to pick one side or the other, I think it might be a red herring. I think this might be the start of Facebook going down the route that Google and Alphabet have gone down, of making lots of interesting bets that may not pay off. I hate to say never, but when I think about the potential uses down the road, I see all sorts of uses for gaming, for training, for all sorts of wonderful things, but not to be a massive part of people's lives that can shift the needle in terms of revenue. And don't forget, Facebook's already close to a $30 billion company. Can VR and AR make a meaningful difference to Facebook's revenue? I'm not so sure.
And I've got to bring it up on a day where we see sort of international relations being taken on the Twitter platform between Mexico and the United States. How are your clients looking to engage with Twitter at the moment? Is Donald Trump accessing his clients, his user base in the right sort of way? And Where's Twitter's future in your view?
Yeah, Twitter, so for advertisers' thoughts around Twitter are quite pragmatic. Twitter has a large audience, they have good ad units, they have good targeting, and so there are very few advertisers stopping spending on Twitter. I think Twitter's battle is really defining who it is in a world full of social networks. Snapchat's up and coming, Instagram's up and coming, and saying what do we stand for and who are we, and really just getting its mojo back, because with all the other exciting things going on, it's easy for new advertisers to not get around to spending on Twitter because there's always a newer, shinier object like, say, Snapchat or Pinterest or Instagram that just is a bit more exciting than Twitter. So I think Twitter still has a bit of an identity crisis, but advertisers aren't running away. A big audience and good ad units means good revenue.